Supermax Corp's net profit for the third quarter of FY22 plunged 99% to 13.01 million from 1.01 billion as average selling prices and demand continued to come off highs of a year ago during the thick of the COVID-19 pandemic. Quarterly revenue likewise tumbled by 79% to 407.8 million compared with 1.94 billion previously as sales continued to be adversely impacted by the withhold release order from both the US Customs and Border Protection and from the Canadian government on Supermax's gloves. However, Supermax still declared a single-tier interim dividend of 3 cents per share. Moving forward, the group expects to see continued normalization in the rubber glove business as ASPs and demand continue to decline from pandemic highs. Supermax says that the industry is coming off a period of exponential growth and is now moving into a more challenging phase as the coronavirus becomes endemic. The group says that many of the large buyers seen at the height of the pandemic, such as the governments and large hospital chains, are full or near full in terms of the PPE stocks after a period of aggressive sourcing and buying. Meanwhile, Supermax said that it has officially started the groundbreaking of the US plant in May this year as part of its efforts to address concerns on the vulnerability of disruption of PPE supply chains or overdependence on imports. Affin Bank intends to pay a special dividend to shareholders upon completion of its entire 63% stake sale in Affin Hwang Asset Management by Affin Bank subsidiary Affin Hwang IB for 1.42 billion ringgit to Starlight Asset. President and Group CEO Datuk Wan Razli Abdullah Wan Ali said that the divestment will result in a gain of 1.063 billion ringgit. He was speaking during a press conference held after Affin Bank's extraordinary general meeting, which was held virtually. Wan Razli said Affin Bank shareholders during the EGM approved the sale of Affin Hwang IB's 63% stake or 7 million shares in Affin Hwang Asset Management. He was quick to add, however, that Affin Bank is unable for now to comment on the quantum of the special dividend as the group has to allocate capital for future growth. According to him, proceeds from the sale is intended to fund Affin Bank's core business of money lending and finance the bank's working capital needs. The Security Commission's approval is still required for the sale to go through following the shareholders' consent. Wan Razli says the deal is expected to be completed sometime in July to September, and if it goes through, then the group needs to submit an application to Bank Negara for the special dividend as it is a financial institution. He says Affin Bank intends to pay its shareholders the special dividend before the end of 2022. The ringgit weakened against the Singapore dollar past 3.2 for the first time when it opened today, but in later hours rebounded to 3.1938. During the day, the ringgit traded between 3.1936 and 3.2057. Demand for the ringgit has risen as the Singapore dollar strengthened. The Straits Times reported on Wednesday that consumer demand for the ringgit rose on Tuesday as the Sing dollar continued to strengthen against regional currencies and queues were spotted at money changers in the afternoon. The MYR SGD exchange rate was closely watched against Singapore's 2022 first quarter economic performance, which was announced on Wednesday. Reuters, quoting Singapore's Ministry of Trade and Industry, reported that the city-state's economy, as measured by GDP, grew 3.7% year-on-year in the first quarter. This was reported as being higher than the government's estimates, but within analysts' forecasts. OANDA senior market analyst Jeffrey Haley, in a note, said that following Singapore's GDP announcement, that with the city-state's inflation data also better than expected, expectations of another unscheduled tightening by the Monetary Authority of Singapore had receded for now. Haley said this may bring some relief to the ringgit. Hibiscus Petroleum's net profit for the third quarter of FY22 soared nearly tenfold year-on-year to 307.5 million from 32 million due to a mixture of new assets, high average realised oil price and prudent cost management. Revenue for the quarter jumped by 37.5% to 297 million. The group also declared a single interim dividend of 1 cent per share. Group Managing Director Dr. Kenneth Pereira said that this is the first quarter for which the group is reporting operational operational and financial metrics, which include the newly acquired assets, and it expects its numbers to further improve in the coming months against a backdrop of strong oil prices. To recap, in January this year, Hibiscus, through its indirect wholly owned subsidiary, Peninsula Hibiscus, successfully completed the acquisition of the entire interest in Fortuna International Petroleum Corp from Repsol for $212.5 million US. Moving forward, the group said it has seen oil prices at various price levels and yet have managed to remain profitable, which it says is down to its average unit production cost having been below the average realized oil price at the relevant times. Hibiscus adds that the careful management of costs to maintain low operational expenditure and the successful execution of production enhancement projects are key towards achieving low unit production costs. The High Court today upheld the Mariva injunction imposed against fugitive Low-Tech Joe and his father, Tan Sri Larry Loh Hock Peng, in a bid to freeze and recover $1.432 billion of assets, where it was earlier granted ex parte 2 months ago. This follows Justice Hayatul Akmal Abdul Aziz hearing the inter partes injunction application on Wednesday and agreed to grant the Mariva injunction on an inter partes basis following submissions from 1MDB counsel Siva Kumar Kanagasabay. Siva Kumar said the court also granted supplementary orders that included that personal service of the inter partes order to be dispensed with and service by leaving a copy at the duo's last known address at the Tanjong Bunga bungalow and serving on their solicitor on record. The court also ordered Loh and Hock Peng to comply with the Mariva disclosure order to the court and also their whereabouts within 14 days of receiving the order through their solicitor. Failing to do so within 14 days would mean that they would be debarred from being heard in the proceedings, their defense being struck out, and that 1MDB is allowed to consider entering a judgment against both Loh and Hock Peng. Following this, Justice Hayatul Akmal also ordered Loh and Hock Peng to pay costs of 5,000 ringgit to 1MDB and fixed June 13th for further case management. On March 15, Justice Hayatul Akmal granted the Mariva injunction against both Loh and Hock Peng on an ex parte basis and made the discovery order before inter partes were heard on Wednesday. However, Loh and Hock Peng filed an application to set aside the Mariva injunction imposed on them later in March. But last month, all of a sudden, both terminated the service of their solicitor, Messrs. Valen O and Partners. Earlier this month, Justice Hayatul Akmal did not allow the law firm to discharge themselves until the papers are directly served on Loh and Hock Peng.